Welcome to Power Charting. I'm Bruce Fraser, your host, and we have a very special guest today for Power Charting, and we want to get right to it. So our guest is Mary Ellen McGonagle of the MEM Edge. Hi, Mary Ellen. Thanks for
Hi.
joining.
Oh, Bruce, thank you for having me. This is exciting.
This is so exciting. You know, I'm kind of starstruck. You're just so great. And I have to say that you and Aaron are two of the hardest working people that I know. It's just remarkable the amount of content, the great work that you do. I'm going to just list these things. So, so you have your MEM Investment Research newsletter, which you're going to talk about in a minute, which I think is remarkable. And then also you do Wealthwise Women with Aaron, which is Thursdays at 3 p.m. Eastern Time. You are a commentator, a host on Market Watchers Live on Fridays and sometimes other days for that matter. And then you have your own show, the MEM Edge, which is going to go to Fridays at 3 p.m. Eastern Time.
That's right.
What did I miss?
Well, we have blogs. So if you are a member of StockCharts.com, you can go to the articles page and regular contributor there as well. So yeah, it's the beauty is I love what I do, and I know that you do as well. So it oftentimes does not feel like work. It's just sharing the wealth of knowledge that's been accumulated over my many years.
Well, and you're very good at what you do, and so your stock selection process is incredible. It's just I love to always keep up to date on what you're doing, and we're going to talk about that more today. So we're going to get right to that. I do have a couple of quick announcements. The TSAA SF is having their annual conference in San Francisco. If you find yourself in the vicinity on September 14th, this is just an all-star list of great speakers. And if you'd like to read up on the speakers, just drill into the Register Now button on the homepage, tsaasf.org, and check it out. And it's just an absolute value. And they've given us power charting people a special rate. And so you get a special rate if you sign up before August 31st. So we're very grateful for that. So I hope to see you there. And then also Best of Wyckoff Conference is coming up. This is on September 2nd. I'm going to be one of the speakers at that, but it's a great list of Wycoffians, and it's a must-attend event. If you cannot be there live, there will be a recording. Every person that is a member or signs up for this will have access to that recording, so you can listen to it at your leisure on demand. Also, Ramon has his upcoming Wyckoff course, and he has a special discount, and then also his other fall course, Trading Practicum. So when you see this, we are recording actually before this WMD session, but that has already passed as of this announcement. Okay, so back to it, Mary Ellen.
Yes, what an interesting looking chart.
Well, this actually was from last week's power charting episode, and so I'm not going to spend a lot of time on it, but the interesting thing that's happened, this was the 03 bear market over here, and the bear market, let's see if I can do some artistic work here. Yeah, so here, this was a bear market. You can see the yield going up on the S&P 500, this red line, and treasury yields were falling. Typically, treasury yields fall in a bear market during a recession. Well, look at the yawning gap between the yields of the US Treasury 20-year and the S&P 500. Well, you get over here to 2009, the next really big bear market, and you can see that this time something very important happened. These two yields crossed each other. the yield of the S&P 500 was greater than the yield of the US Treasuries, 20 years. And then in 2012, they touched again. And in 2016, they touched again. Each of those were important slowdowns in the economy and produced falling interest rates in the Treasury market. Well, here we are again. So this could be a sign of some kind of a recession, or it could be a slowdown in the economy. Falling interest rates could be endemic of that happening. The thing that we want to be focused on here is the fact that now the S&P 500 and the 20-year US Treasury are now matching again. So what Mary Ellen and I are going to talk about today are stocks with yield. And stocks not just with yield, but with good growth potential also. And so, and part of the reason that we're having this discussion is because of this moment in time when these yields are matching, which is about 1.85% on the US Treasury roughly, and on the S&P 500. And so this is a very unique time. Also, these green boxes, I'll just point out, were what was going on in the S&P 500 at that time. So you could see that in the green box that there was these reaccumulation periods where the market went into a vast trading range that lasted for a year or more and produced a cause for another move up. Well, that looks a lot like what we have right now. The S&P's jumped up, backed up to the top of where it broke out, and now it's poised at this juncture of these matching yields potentially to go up again. And so this doesn't look to me like the conditions that precede a recession, which is a stock market that's in some kind of a deterioration, distributional type structure. So Mary Ellen, I've set up our discussion with this. What are you seeing here? What are your thoughts?
Yeah, so let me go ahead and share with you a little bit more in the way of information as to my background. And then from there, Bruce, I don't know if you stopped sharing your screen.
Do it right now.
Yeah, and then I can go ahead and share my lovely screen here. Take a little bit of a minute. And so for my work, and I'm just going to take you very quickly to my website so you can get a little bit of background as to who I am. I'm MEM Investment Research is my firm. I've been had my own firm for about 4 years, and I do work primarily with self-directed investors. But my primary background as it relates to equities is with William O'Neill and Company. So if you were inclined, you can certainly go to meminvestmentresearch.com and you can read all about me. But my primary background, again, with equities is with William O'Neill, and his process, for those of you not familiar, he's the founder of Investors Business Daily. He's on the prowl for those big moving, big winning stocks, those big outperformers. So most of my work is centered around finding those triple-digit winners, among them certainly nice double-digit. But certainly this is an approach that can be applied not only just to these high growth tech names, it also can be very easily approached to the current environment where these higher yield names are outperforming. And I did want to point out, if you go to my website, I do have an offer, special offer for those of you watching. You can go ahead and trial my newsletter. It's a bi-weekly report, and for $7, you can look at it for 4 weeks, and you'll be able to not only get a really solid feel for where we are in the markets, where we may be headed, but also these really stocks that are in sweet spots that are taking advantage of this current market environment. So that's a bit of background as to who I am and my general approach, but again, the approach can be very broad-based. So what we are going to do right now is go ahead and take a look at stocks that are currently have some growth aspects to them, but they're also offering a high yield. So in other words, these are stocks you can certainly go into utilities, staples, and REIT stocks. We're going to take you outside of that realm and share with you some names that may not have crossed your mind or your path. This current first name is Amgen, AMGN. Take a look at this nice advance with this particular stock. It does, in fact, yield 2.2%. And what I did want to point out to you is a couple of characteristics that the stock has and what is going on here. This particular initial move here, it's taking us back to the end of July. That's all about earnings. The company came out with numbers that were very solid. They were also 10% ahead of estimates. The street liked it. You can see this big volume. We're looking at a weekly price chart. And what I wanted to point out to you is upon this initial burst of upside activity in response to earnings, we can see that the RSI upon that went up above this net neutral 50, trended positively. And then we also had a MACD that had an earlier black line up through the red positive crossover, but in line with this move here on earnings, the MACD turned positive. And then thirdly, we had this stock price on this weekly break above these key simple moving averages. So from my work, this red line is your 50-day. This blue line is your 200-day. So to have this type of triple confirmation on volume, really quite bullish, and the growth prospects have been raised even further. Today, Amgen announced the purchase of a cell gene subcomponent company, and analysts like the move, and we can see the stock potentially continuing to possibly trade higher as the stock has broken out of a one-year base. And Bruce, why don't we have a peek at your view using your wonderful point and figure style, and we can compare notes on this nice 2.2% yielder.
So just a question on yield.
It's 2.8, pardon me.
Even better. So
yeah.
Wait a minute, maybe it'll go up some more.
Sorry, I failed to.
No, this is good.
Yeah.
So, Mary Ellen, because we're seeing these great stocks, high quality stocks, with yields at or above literally the yield of the S&P 500, which is very attractive. And so I'm looking at your chart here. There's looks like a great point and figure count, which we're going to look at in a second. Mm-hmm. But I'm thinking that because you will look for outsized growth in stocks. Mm-hmm. And so a lot of times you're looking at stocks that may have yield, may not have yield. And I'm of the mind that if these yielding stocks catch fire and start to lead the way because they're so competitive to the bond market, that they could pull up stocks that have yields that are below the S&P 500. And I just wonder what your thoughts are about this.
That's actually
the whole market up.
You're absolutely right on that aspect. And the reality is the average yield, and Bruce, you can correct me if I maybe have dated, but it was 2.2% for the S&P. But when you look at yields, it's really going to be relative to those treasury bonds and what they are yielding us. And so in the previous chart, we looked at the 20-year treasury. The 10-year is even lower. It's in that 1.4, 1.5 range. So when you can own a stock that is, in this case, offering 2.8% on that yield side, and it is in addition providing you with this growth component that could supercharge the stock. Analysts are raising estimates for Amgen, and this is a turnaround story. So the growth prospects for next year are still single digit, but they're certainly a lot better than they've been. I think, yeah.
What I really like about your service and your skills is that you're so good at finding these emerging growth ideas. And so if you can have a combination, best of all worlds, emerging growth and yield, which you get paid while you wait with yield. And so you have both those components in good stocks. This is a pretty exciting combination. And it gives us a way to have hope when we see such low yields in the bond market.
True. And really, Bruce, we've talked about this. It's worldwide. And you go over to Europe, we're talking about negative interest rates. So it's not just US investors, it's really globally that investors are seeking these yields and they are coming to the US markets.
I was told by a friend of mine in the know, and so I tend to believe that his numbers are pretty accurate, that 94% of the bonds in the world that have positive yield are in the US.
Mm.
Isn't that amazing? It's
It
just,
is.
the whole world is just infected with negative interest rates.
It's
And, and I think this is what makes ideas like this compelling.
mhm.
So here is a point and figure chart, and it's a one box reversal chart, which is like, it's like a daily chart. 3-box reversal is like a weekly chart, and there are some tutorials that I've done that you can watch, but I just want to point out that there's a count here that goes 210, 226 for Amgen, and we are in the window of that. But notice that this count, which was a beautiful count that was formed in 2019, we've reached that target, which is right at the prior highs, which is the classic place where you would expect resistance. So does this say that this move is over? Well, it means that it may need a pause, but here is a 3-box reversal chart of Amgen, and pointing out the area that Mary Ellen was showcasing in this chart structure is you can see that there's a count that goes back to the end of 2018 that counts 278 to 294 on the point and figure. And so there may be a pause here, but in Wyckoff terms, we would look for the pause to not pull back much, or just to spend time at these prices and then start to go up again, because there's a much bigger count available to us for higher prices. And if Amgen gets to this 278, 294 price, there is a bigger count that we can take. And so we count these objectives in segments, and there's another segment yet to be counted, and I'm hoping Mary Ellen will come back in the future and we can count that. So,
Yeah, that'd be wonderful.
okay, so there's Amgen, and so I'm going to turn it back over to you.
Sure. And I can go ahead and review the next interesting stock that we have that offers a yield. It's a name that I know pretty much every one of you is going to be familiar with, and that is McDonald's, MCD. We are looking at a weekly price chart. I'm just going to go ahead to a daily to give you a little bit more in the way of perspective. It's been a bit bumpy, but if you correlate this with the broader markets, and if you were, we were looking at a little bit at just how volatile August has been, we can see that overall McDonald's has held in remarkably well. The stock does offer a 2.1% yield, and we can see it's struggling a bit, but certainly outperforming the markets. This is the RSI up here on the top. It's still up above that 50, which is telling you short term, we're looking at a daily chart, that it's positive. MACD, it's going to waffle like this, but it's still up above that net neutral zero. Very good standing, positive. Stocks finding support. This is, your red line is the 50-day simple moving average. As long as we're able to retain a presence above that, we are in good standing. There's another component with my work when I am looking for these potential outperformers. That is the concept that the stock and the company has something that's really making them, why is this growth so big? What's the sustainability? And for McDonald's, it's all about delivery services. They just purchased a new technology company that's going to help them when you go through their drive-through. They're going to be able to upsell you based on whatever you order. The menu is going to change throughout the day. So it's embracing these new technologies. They have a company called Golden Arches in Europe where there's no cashier, there's no dining room. You just punch in your order and they deliver it. So it's these innovative companies in an otherwise staid industry that are going to continue to potentially outperform.
Wow. Well, let's look quickly at the point and figure, and so we can see here with McDonald's, interestingly, we have two, on the one box reversal method, we have 2 counts, and these are swing trading counts. We consider them to be shorter term. The larger count, 218, 234. The second count, smaller count, confirms 216, 224, and we can see here that the smaller count confirming that bigger count suggests that the move is over, and that, so just look at this last push up into that 216 level where it went to 220, it has a little bit of a climactic surge to it. Those are the types of things we look for in Wyckoff analysis, is we look for a climax to stop the advance. But does that mean that this move is over? Well, let's look at a 3-box reversal. So this chart goes all the way back to 2012, this area here, the lower yellow box, and it counts up to 180. Well, look where it went. It went right to 180 and then paused and formed another reaccumulation. And this is often what happens, is that they stop, they rest, they might rest for a year or two, and then they reemerge into a new uptrend. Well, we can see here that we've had a second pause that goes back to 2017. And I would argue, Mary Ellen, that McDonald's has just started its important move up. There might be a little pause here, but we have a count that could be made larger in the future that goes to 294.
Wow.
And so, anyway, go ahead.
That would be significant. Yeah, certainly.
And it goes to your idea about these important management improvements that they're doing that are catalyzing growth.
Exactly. And also there's another component where they are shifting their menus to cater to consumers who are shifting their diets, whether it's protein related and so forth. So being responsive can help as well.
Wonderful. Well, I'm a big fan of McDonald's, and I'm going to turn it back over to you. Let's see if we can do another one.
You bet. Let's go ahead and take a look. This next one is going to be a utility stock. We thought we'd give you a nice looking Sempra utility. SRE is the ticker symbol. This is a weekly. And we can see the stock has had a fairly significant run up into this May correction. But what I like is more recently, it has picked up and it is poised, and it actually has broken out of this 3-month base. We are looking at a weekly chart. Let's go ahead. We don't need intraday, but I will give you a daily chart view. And this is that big move. And then, of course, the beginning of August, really most stocks did get hit. But more recently, we can see, again, it's breaking out of this nice base. We can see that the RSI is trending upward and is above that net neutral 50. And then that MACD in line with this crossover, I talked about a positive crossover above simple moving averages in line with a MACD that is also above that neutral zero, heading north. So the stock looks constructive, and when you see the higher volume characteristics are occurring in line with this break above the 50 and a positive RSI, when you can correlate that together, those actually four components, MACD, RSI turning positive, breaking above the simple moving average on volume, that's pretty positive, and it does yield a 2.7%. So
well, before we look at the point and figure, I just want to just illustrate that this recent count area, this trading range, which goes back to June, is a potential swing trading count that we could use, that more trader types could use to campaign shorter term moves. But look at this massive accumulation area that goes back into 2018 and goes back to June a year ago, and we can't even see it all. And so we really want to count that, because this is like a foundation of a house. So we have this big, strong foundation, which is a big point and figure count, which supports our smaller counts as the trend is up. Because as long as there's more count in the bigger structures, then that gives us a lot of confidence to just keep campaigning the uptrend and to not look at it as being expensive or overbought. And so let me now show you the point and figure.
And that is an interesting concept. Certainly the move it's had into for a good part of 2019 would have some investors scratching their head as to whether the move is done. But you're telling us otherwise. That's great.
Well, I just think that Point Figure can really help with that. And
Mm-hmm.
you're so good at finding good, strong stocks that are going up for good fundamental reasons, and they have earnings growth and sales growth and so on. It's nice when you can find a Point and Figure story. And I know the Point and Figure is arcane and old and mysterious, but it gives us a great psychological edge. Because if Mary Ellen's showing us stocks that have great ideas, and this is why I want everybody to go look at Mary Ellen's newsletter, because if you have that, and then we can do the Point and Figure work, and we see, oh, McDonald's is going to 294. It's like, oh my gosh, there's more to go. And you know, it tells us to keep campaigning this and to keep focused on the upside. And so here, in the case of Sempra, we have this nice small reaccumulation count, and this count is a potential swing trading count. Well, look at this. It counts from 104 at the count line and 96 at the lows. It counts up to 184. And so there's, I mean, in a utility, there's huge potential here. And this really is a bond surrogate. So the other thing I would point out is that there is a much bigger countdown here that goes back from the beginning of 2017 all the way back to 2014, and that count, that potential count could lead to much higher prices. But we take things in chunks. So we look at the 184 as a campaign in and of itself. We're good risk managers, so we're really careful to make sure that we have good stop placement and so on. And you know, Point and Figure counting is a unique tool, but you know, things happen and stocks can turn, but we use good risk management. But we have a really good case here, fundamental and Point and Figure, for higher prices.
Very good. I think we have time for one quick other one.
Sure, let's do it.
Sure.
Okay, there you go.
And the next one will be maybe perhaps unusual for some people to consider, but that would be a semiconductor stock. And of course, that has been a rather volatile period in the markets of late, so you will want to tread with caution. But I'm going to pull up KLAC. This is a very predominant name among semiconductors. This yields 2.1%, and we can see this significant uptrend here. And this is despite a really choppy, tough market for semis. And the reason is KLAC is in a very vibrant area of the chip equipment space. They are in that data storage, data analytics. There's big demand for their chips, and the growth prospects here are in fact quite strong. We can see that the stock is finding support. We're looking at a daily price chart, and we can see, actually this is a weekly, this is your 50-day simple moving average, the stock hitting a new high, finding support at that upward trending 50-day RSI and MACD are positive. Bruce, hopefully you can end it with your Point and Figure view.
We'll do it. Let's see.
And analysts are raising estimates higher for this stock. It has great growth prospects as well.
This is exciting. So growth and income above the income of the 10-year Treasury. This count here, which could become a much bigger count. So I'm not seeing my pointer for my mouse, so I apologize for that. So I'll just tell you that this count, which goes back to June, can be taken all the way over to the beginning of 2018. Very large count. Right now, we're just looking at the base, the count at the base, and in the time we have left, 161, 171, with much higher counts available thereafter. Mary Ellen, we did it.
Thank you so
much. What a blast.
So much fun. Thank you.
And we'll do it again. Take care.
Take care, Bruce.